Well, here's something that you do not see every day. Take a look at these Manhattan condos. These are some of the hottest ticket listings out there. And folks, they range from 10 to 20 to even more millions of dollars. Now, just a couple of years ago, listings like these would have been priced much less. Are these properties a sign of a healthy market with a lot of demand or the indication of a bubble? Wei Min Tan is one of the top brokers at Charles Rutenberg LLC, which represents some of those properties, and it is one of New York's largest residential real estate firms. And we welcome in Wei to Talking Numbers, a first-time guest. Wei, thank you very much for joining us. Amazing apartments here. And, listen, obviously your job is to say why this market is healthy. So you brought in 3 reasons why we are not in a real estate bubble. Your first one has to do with lending. Please explain.
Yeah, I think banks are not lending recklessly like what they used to do. So right now, the buyers who are actually getting loans are those who can really afford to get the loans. So that's representative of a good demand.
It's interesting. I would imagine, though, before we get to your second point, that if you're buying a $10 million condominium, are you even taking a mortgage? How many of your buyers are all cash, even at those price points?
Yeah, I think it's very important to differentiate the 10 million and above market versus the core. And the core of the Manhattan market is $5 million and below. So about 85% of the transactions are at $5 million and below. But of course, there's a lot of like sexiness, if you will, in talking about $50 million apartments. But those are actually really out there, and they are representing a very small percentage of the actual transactions.
Okay, next one that you've got is the ratio between income and rents. Now, we're talking about purchases, but income and rents can often be used as a guidepost to where the market is valued. Does that show that it is fairly valued?
Yeah, with regards to this point, I'm looking at the U.S. averages, and the U.S. average price to income ratio, it's about 3 times. So the average house is about 3 times annual income, which I think is very good and very healthy. Because a bubble market would be something like Hong Kong, where the property prices are about 25 times their annual income.
Okay, next one has to do with supply and demand. I would imagine that demand is fairly good if you've got these kind of prices being listed and in some cases taken. But how is the supply? Is it so low that these rich folks are tripping over themselves?
Well, if we are looking at the U.S. market in general, I think that the demand is going to come from the millennials who are going to eventually move out of their parents' homes into their own households, as well as from new immigrants. But specific to Manhattan, there is a lot of demand because, A, we have the buyers who are buying to live in. That's roughly about 70% of the transactions. Then, B, we have the investors. That's roughly about 30% of the transactions. So within the investor population, we have the locals as well as the global buyers. And the global buyers are seeing Manhattan as a safe haven for their assets. So there's definitely a very strong demand there. In terms of inventory, the beginning of the year, the inventory was really tight and it was more of a seller's market. But I think right now it's becoming more of an equilibrium and it's more balanced now. So when you're looking at the core, okay, and more specifically, it's anywhere from, let's say, $500,000 to $3 million, the supply is very tight. But if you're looking at the very high price point properties, those that are selling at $3,000 to, let's say, $7,000 per square foot, a lot of them are being built along the 57th Street corridor.
Yeah.
And in the next 2 to 3 years, it'll be interesting to see where the demand is going to come from.
Yeah, $90 million, whatever, for that 157 penthouse by a Bill Ackman-led investor group. Unbelievable, Wei. Hey, Wei, thank you very much for the insight. We do appreciate it. We hope to see you again on Talking Numbers. Take care.
Yes, my pleasure.
All right, thank you. Maybe we should call it Talking Condos, folks. Those prices are just, wow. Anyway, thanks very much for joining us here on Talking Numbers. I'm Ryan Sullivan. We'll see you next time. Take care.